Hey, what's going on, everyone? I am back. Today is September the 25th, 2022. Yeah, a hard landing is inevitable. According to Goldman Sachs, they're trying to tell us now that be prepared for a stock market crash. I think that is the whole mantra of the, economy. A lot of the pundits, a lot of the people on social media are telling us be prepared for a crash. Like, be prepared for price to go massively lower than where we are currently at in the NASDAQ, the Dow, and the S&P 500. And a lot of people are revising their price targets of end of year for the S&P 500. We're going to talk about this because understand, forward thinkers, those who have billions of dollars at their disposal to try to make money off of, they're trying to prepare for what's to come. So we're going to look at the chart, going to look at this article as well from Benzinga to try to see why did Goldman Sachs lower their price target for the S&P 500. Let's go ahead and look at this article first. All right, so here's the article from Benzinga. You guys can see it was posted yesterday to the internet. A hard landing scenario is inevitable. Goldman Sachs cuts its S&P 500 targets as investors flock into what? Cash. Yes, cash. Probably one of the strongest markets right now within the asset space. If you're trying to withhold or maintain the viability of the money that you have, then a lot of people are putting their money into cash. And once the market becomes attractive to come in and buy up these cheap assets, then guess what? That's when the dollar is going to go down, because people are going to start taking the money and put it into real estate and put it back into the stock market, put it into precious metals, buying cheap businesses because people need to sell their businesses. That's what's going to happen. Now, Goldman Sachs, one of the biggest conglomerates within the financial space, is revising its S&P price target. If they do that, then why not us? Why do people try to hold us to what we say? When you see new information appear that you didn't have revelation to before, then that tells you, yeah, I need to adjust what I've been saying. There's nothing wrong with revising your original ideas. We're humans. We're supposed to do that, especially once you get new information that you didn't have access to before. This is what Goldman Sachs is trying to do now. They are saying that the Fed will have to hike rates sufficiently that it will result in a U.S. recession at some point during 2023. Now, if they're saying that now in 2022, what are the chances that we may be in a recession already? Right? 2023, it will be too late. So what he's trying to tell us, if you guys read in between the words, is that, hey, we are already in a recession. If we're telling you now in September of 2022 that in 2023 a recession is going to occur because the Fed's going to have to raise interest rates high enough to hold down inflation, then you want to think of a recession today. So if you think of a recession going on today, then that means that you will already be prepared for 2023. Preparation needs to be made now rather than when it occurs, the recession. So look at this. A hard landing scenario is inevitable. This is what the chief U.S. equity strategist David Colston is saying. He works with Goldman Sachs. So one person. All right. So you guys can kind of see how they're trying to lead us into the whole conglomerate of Goldman Sachs, but this is only this one man's opinion. All right. He's trying to tell us that it's inevitable. It's going to happen. Be prepared. Now, they posted a target valuation for the index at 3,600 points by the end of the year, maintaining that valuation in 6 months and reaching 4,000 within 1 year. 3,600 points. 3,600 points. Do you guys see where the S&P 500 is right now? 3,693. Like, seriously? You want to come out with this article? Like, David, you want to tell us that your new price target is 3,600 and we're already literally there right now? Goldman Sachs changed its projections for the market gauge as interest rates are expected to continue to climb. So he's looking for interest rates to go up because the Fed won't be able to contain inflation. Goldman had already dropped its year-end price target for the S&P 500 for 4,700 to 4,300 in May. So you guys can see that as more and more information comes through, they are continually lowering their price targets. Back in May, they dropped it. They originally had it at 4,700 points, They saw, well, it looked like Jerome Powell is going to continue to raise rates, so we need to drop it down to 4,300. They did that in May. That's when they expected a federal funds rate to peak at 3.25. Well, now you guys can see today, more information is here. Now they're trying to tell people to have much of a defensive strategy, right? Have a defensive strategy as we go through this recession, as we go through this volatility. He wants people to shift its investment recommendation to a defensive strategy. Now, what does that mean? They're advising people to own stocks with quality attributes such as strong balance sheets. They got cash, high returns on the capital, and stable sales growth. Those who can weather the storm. Now, how many companies fit that category? That's where you had to do the research, unless you pay Goldman Sachs to give you this information. All right, so that is it. Now, I'm really here to show you all the price chart, because the price chart gives us feelings as well. It tells us how people are positioning themselves so that they can either, one, like Goldman Sachs is trying to tell us, have a defensive strategy, or two, are they scared? Are they nervous? Are they trying to move assets to certain areas of industries so that they can be prepared for 2023? You guys can see that I did a video for the S&P 500, the NASDAQ, and the Dow on September the 20th, so 5 days ago. And on that particular video, we was looking for the price in these three indexes to go up. Now, you guys can tell that it did. So let's start off here with the Dow, okay? Now, the anticipation that I was looking forward to in the market going up was due to what occurred on this weekly price bar right here. Okay, let me show it to you. Okay, this told us that instead of the price in the Dow going completely lower, that we played some upward movement the next week. And it occurred, but it wasn't sustaining. So that tells us that even though the market on all three indexes across the board was looking for strength, they was looking for price to rise, it couldn't grab the reins. They couldn't sustain it. That is why price only went as high in the Dow to 32,800 points. And that is when Jerome Powell came out, said they're going to do everything within their power to make sure that they tame inflation. And that's when the market fell out. It happens. So if you was able to see my video and was able to grab at the high into the market in the Dow, because I think my first price target was around 32,400. You probably got about 0.9% right there. Not much, maybe 1% into the market on that one particular day. It didn't last long, so maybe 1.25%. Now, I'm here to be forward thinking because we already knew that we are in a downtrend in these three indexes. So for us to not think that we're going to continue to go lower is asinine. Yes, we need to be thinking that it's our original trajectory, is to see price go down. All right, so we're going to look for the market to continually do that until we see price do this. We want to see the market do this. That is the only way we will change our analysis of being fully engulfed with thinking price is going to go down. That is it. So the first thing we're going to do is we're going to cancel out this top portion horizontal line because the market could not even break 33,000 points. So ain't no way that we're going to look for the market to run up to that 34,000. No way. Not yet. Now, one thing that is still applicable is this downtrend line. Okay. So even though we can see price is in a downturn, I want people to realize that we may actually begin to see price lift in the Dow, all because of this area right here. Okay. So this upcoming trading week, keep your eyes open on seeing whether or not buyers are going to come into the market around 29,500 points, give or take. This is where we're going to keep our eyes open because we can still see a minor run up. Like, let's not get it twisted. This is a timing issue. If you understand, long term, we're looking for price to go down. Okay. Now, for me, that means monthly time frame, 3 months, 6 months, that arena. But 5 days, daily time frame, there will be times to where price is going to run up. But we have areas to where we can see price get back rejected and come down. So like we can see the market in the Dow run up to around 30,500 points, possibly even 31,000, right? We can even see it run up to 32,000, and everyone would get back on board to think that the market is now bullish. But we have seen price get rejected here. So it all depends on how long you're going to be in the market. Timing is going to be the issue here. Now, looking at this on the weekly chart, yes, the market is weak, but it's time for us to see price begin to go back up. Okay. And for us to see price close down here to where the lows came in and the high came in around February 2020, I wouldn't be surprised to see the market begin to grow up to catch more and more people off guard. But when you see this on the 2-weekly chart, this is definitely massive weakness here. Okay, now if we're going to look for price to trade range bound for like a decade, because I put that in our community to show you all that Stanley Druckenmiller is looking for the markets to trade range bound, to be flat, not really move for like a decade, for 10 years. If we see that, if we were to take the high that came into the Dow, right, which is around 37,000 points, and divide that by 2. So the market can find the bottom around 18,500 points. That would kind of place the market range bound, right? And you can see that this is where the market in the Dow during the pandemic came and found support. So that is a ways away. That is where you can double your money. That is where we can find the bottom. And that is another 38% move. Now, I know Ray Dalio was talking about the market going down another 20% from where the price currently is. And 38% is not that far. So for him, 20%, we can see the market in the Dow come up to around 22,800. Like, these areas are already established. So we cannot act like these people don't know what they're talking about. If Ray Dalio is looking for the market to go down another 20%, this is where it's going to be. We've already been here before to where buyers came into the market. So that's very plausible. Like, we can see that happen. Okay. So as of right now, just doing this as a broad spectrum, yes, we need to be prepared for the market to go down, but it doesn't mean on certain days, on certain weeks, that price is not going to go up. Okay. So check this out. This is the monthly chart. We got 5 days and 6 hours left. And again, we're still seeing weakness here into the market in the Dow. Okay. So now we're going to play the weakness though, across the board. Okay. We're going to play the weakness. Now, we're not going to be tricked into thinking just because price goes up that the long-term view has changed. We're not going to do that. But it doesn't mean that we can't profit on the way up too, though. I just want to set that out front so you all can understand what I'm saying. Just because price goes up doesn't mean that we can't participate. This is our long-term view. This is what we're looking at from 3 months, 6 month basis as to where price is going to go. Okay, especially until many people are trying to say until the Fed pivots, until they change on raising interest rates, until they change on the Fed tightening of where they're not buying any more mortgage-backed securities or corporate debt. Until they switch, the market's going to continue to be on this downtrend. Okay, so let's try to figure out price targets. I really think that the market is ready for a move higher because this has been what, 2 weeks price has been coming down. So the market's going to try to come back to life and try to induce more people to come in. So be prepared for that this week. So the first price target is going to be around, I'll do 29,000 points. That's our first price target. You guys can see it's only 1.98%. Second one is going to be around 28,000. Okay. Third is going to be around 27,400. Now this is the long term. Okay, so we got to be looking at the market from a long-term perspective. Okay, so look at this. This is around what I'm talking about. From a 3 months price chart. This is massively weak. Like in the next 5 days, I really want to emphasize this. If this price bar looks the way that it looks right now, then yeah, it would not be a problem for us to come all the way down to 27,000 points. Not at all. This is massively weak right here. Okay, so be prepared for that. Let's see what we got on the 6 months. So you see the same price bar. It looks the same from the 3 months price bar. All right, so let's go ahead and look at the NASDAQ. Let me hit this on the weekly chart. And again, hopefully he was able to get some of that profitability out at 12,800 points, because I told you that was our first price target. And I told you it wasn't a lot, 1.5% right there. I'm not going to go through a lot of the stuff that I said for the Dow. It's just going to go across the board. It's the same thing for the NASDAQ and S&P 500 as well. So I wouldn't be surprised to see the NASDAQ try to hit a basis and begin to run higher, but we're not going to be tricked. It could hit 12,000. It can even run up to this downtrend line, which is around 12,500. We can see that. But you need to be prepared to take the bag, though, once the market hits those areas, and not to hold on longer than what you have to, because we already know the overall momentum is to the downside. So let me go ahead and put this on the chart too. Now I can see support already coming into the market in the NASDAQ around 11,000 points. Why do I say that? Well, we can see back here in 2020 that this is where the market originally bounced and moved higher. So that's going to be our first price target. Okay, first one is around 11,000 points. My second one is going to be here around 10,400 points, which is around 8%. Now, if we were to see the market trade range bound like I did in the Dow, the high came in around, what was the high? 16,677. Let's divide that by 2. So 8,338 points is where we can see the NASDAQ run down to for we can trade range bound. So it's like another 20%. Like I said, Ray Dalio is looking for the market to run down 20% from where price is. So that's not out the question that we can't see the market run down to 83,338 points. That's definitely possible. Okay. So that is it there. We got our first price target, 11,000. The second one is going to be around 10,500. And then the third one, so far, is going to be around 10,000 points. Okay, I really see the market running down to here though. So let me put around 97.75. We'll do that. Now, going to look at this on a long-term basis. We're going to continue to be weak into the market in the NASDAQ. So as long as price stays below 13,000 points and stays below this trend line, guess what? We already know we're in position. Okay, let's go ahead and look at the last one, which is the S&P 500. You guys can see that, yes, we had a small stint to where price went up. It didn't run all the way up to 4,200 points. It only topped out at 4160, 2.5%, pretty good. Let's go ahead and hit this over to another downside. You guys can see for the S&P 500, for us to trade range bound for a decade, the market topped out around 4,800 points. Divide that by 2, that's 2,400 points. And we can see the market in the S&P 500 fall. And it takes us all the way down here. Look at this. It's amazing that we can actually see where the market can actually go and trade range bound for like the next decade. So if you're trying to time the market, and if we're going to trade range bound for the next decade, like Stanley Druckenmiller is trying to say, this could be the range that the market's going to move over the next 10 years. We could see it do this over the next 10 years before the next monumental, colossal upward trend begins. I'm just saying, like, this is not rocket science. It's not hard. These individuals are getting positioned for this price action right now. Okay, so let me go ahead and get rid of this one down 800 points, 1,800 points. I'm going to bring it up here because I wouldn't even be surprised to see this happen over the next 10 years because we've already seen it twice. The market bounce and hold 2,400 points. Now, that's going to be a whole lot of doom and gloom, But this is where you will want to come in and begin to nibble and hold this for the long term. Like if you buy down here around 2,400, 2,600 points and you sell it when the market runs back up to around 4,000 to 4,600 points, you almost double your money right there. So now let me go ahead and put this back up though. The first price target is not going to be far, just like on the other three, 3,700 points. My second one, let me look at this on the 2 weeks. For the S&P 500, my second one is going to be here around 34. Then my third one is going to be down here around 3,200 points. All right, so this is the long term. Again, expect the market to give us some volatility. There will be days, maybe week, to where price goes up. That doesn't mean that you can't participate. You can still participate and let the market ride higher. You just need to know when you need to let it go though. And don't act like this is a long-term hold, because we are not in that environment right now. This is not one of those environments where you come in and buy the dip and you just keep buying a dip. Everybody's anticipating that we're going to continue to go lower right now, which is going to be the case. So if you do see some days, some opportunity to where price goes up, know when you're going to get out, right? If we see the market next week begin to go up, be prepared to take profitability around 3,800 points, even 3,950. Like, don't hold on too long, because that is where you're going to get caught off guard. All right, so that is it. Let me go back and make sure we got everything positioned. That is the weekly time frame of the S&P. This is the weekly time frame for the NASDAQ and the Dow. All right, so we're good. Give me your thoughts. What do you think? Let me know. Make sure you maintain the profitability, and as always, trade different. I am out.